Fox 5150. We are down in the power hour right now. We are 20 minutes into the power hour. Has it been powerful? I mean, I don't know. The day they did pretty much exactly what I figured they were going to do this morning when I was on here. Which is float right above right there. Let's go to the chart, to the large one right here. So in the 15-minute, you can see what Tesla did. Boom, this was the trend. We broke above the trend right here, and then we just barely pushed up above and went right back down. Bam. And in case you don't know what this is right here, exactly. This is what it was yesterday. This is yesterday's close. So we went right back to the close, and we just floated safely right there. That's what they did. That's today is quadruple witching day. So a lot of things are going on. Market makers just not letting, if your options expire today, they were not giving, and I was one of them, they're not giving you the opportunity to make any money. If you didn't get it back here, like I didn't, you're not gonna get it here. Not today, brother. Not today. The market makers like, yeah, sure, come on, you can hang out, but we just gonna chill. Don't you like chilling? Yeah, I like chilling. Let's just chill. Let's simmer down, calm down. And that's what's happening. The only thing that's happening is business is taking place. But retail, if you didn't get it, because look, man, I'm trying to tell you something good right here when I show you this. When I show you this, you see this? I was green. This is when I was winning. And if you back like right here, this whole day right here, that's the 17th to the 18th. I had every opportunity to close out my positions and take gains. I think I was up 60% on one. I think I was up 30% on another, and that is really my fault. I got greedy. That's what makes you greedy. Normally, when I trade the SPY, I'm on some 10% stuff, and I be in and I be out. 10%. Just keep it simple because you cannot get 10% at the bank. So if you can put $100 in and you make $110, you should not look down your nose at that. But Tesla, man, I don't know what it is about messing around with Elon. That dude makes you want more. But I don't even want one of those stupid cars. I might would like to get a robot. If for nothing else, to have a robot outside, cut grass, or walk around the house and stuff. It'd be crazy, man, just to see that. And I don't even know why I'm saying it, because it could happen, and it probably will happen sooner than you think. But back to this. So we were up here, and we were like all in hopes of like the Santa rally, boom, close out the year, man, and we go up and we hit 500, and everybody would have been happy, and we went into 2025 feeling good. But those that voted the way they voted, they would have been happy regardless if they're invested in the market, because the market don't care about that. When at the end of the day you hit to make money, so you would have been happy. But they had other plans. The Federal Reserve shows up, right? Jay Powell, they got meetings. They got to talk all the time. They got to let you know what's going on. Sometimes knowing is too much, man. Sometimes it's best to be in the dark. Like be a mushroom. Just keep going. I don't know. Sounds stupid and old school, but sometimes. But here's the thing. I found out, because what we knew was that the Federal Reserve was going to show up. And what we knew was that the Federal Reserve was going to make a cut. But he was going to cut he was going to cut the interest rate 25 basis points. For those that don't know, 1% is 1%. It's a 1. But 25 basis points is 0.25. So they were just going to make a little slice. Just a little taste. Cut a little piece of the pie off and keep everything going, not get too crazy. And we knew that. It was like already everybody was forecasting it, and we already knew that that's what was going to happen. You know what I'm saying? Well, they did it. And he had his press conference. They asked questions and stuff. I mean, you could even see when he was having his press conference, man, it was like pretty much nothing burden. There was nothing happening, nothing bad, no harm, no foul. We were happy. We ended it, right? We ended it up. We're coming up. We're doing good. We're not complaining. Then something else was released. I think at the same time or later that day, unbeknownst to us, they had an outlook on monetary policy for 2025 report. And this is done by the Federal Reserve Open Markets Committee. Man, the more you know, the more you know. You know what I'm saying? When you know, you know. So these are the people the governors make up the Federal Reserve. So it's the same people. Well, in the committee, they reduced their collective expectation for rate cuts half of what they had anticipated in September. So back in September, they said we was going to have 4 cuts. Well, now, what they're saying, they said that they were going to cut him like 0.25, do a couple more 0.25, like just take a little slice, which is cool. We can live with that, right? Because then business can continue on. Well, now they expect to cut rates by just 0.5 basis points for the year. That goes from 4, okay. If you don't understand, like I said earlier, 1% is 1. 25 basis points is a quarter of 1. 50 basis points is half of 1. They said they were going to cut interest rates down by 1%. It would have been 4 25 basis point cuts. But instead, now they're like, looking at the data, I'm doing air quotes, which is true though, because inflation is real. Looking at the data, we're just going to do 2 25 basis cuts. I mean, to be honest, they could just go ahead in the first quarter next year and just get it over with. Just rip the Band-Aid and just go ahead and do no basis cut. Just do a pause in January, which is probably what they'll do. That means they'll keep rates higher for a little bit longer. And see, the market got blindsided by that. Smacked upside the head, body slam, can't do nothing about it in front of their girlfriend. And they felt bad. They felt real bad. Just look at that. That's how bad they felt. They just said, you're not going to keep your word? No, we're not. No. So here we are. This is where we at. And how far back does that go? That puts us, at the end of the day, man, like I always tell somebody, if you're investing, you're looking at now and you're like, good grief, I can't believe it. That's a lot of pain. Well, look where we were. Let's go back to 1 year. Let's do 1 year. 1 year, please. Thank you. 1 year. So here we are in 2024. That's this year. This is where the stock market was at on January 1st. On January 1st, 2nd, whatever. The stock market was, the high was 254. I'll just let that sit with you. You see, well, this is Tesla, but I'm saying it's all relative. Tesla was 254. You know, look at it now. It's flashing right there. It's 435. It's double. It's double. Boom. So, saying that to say this ain't that big a deal. So when you zoom out and look at it, macros, instead of being so micro focused, I lost some money. I didn't cut my losses, etc. And I'm down. But am I down? Am I down because I had some wins along the year, and I'm pretty certain that I feel like I'm probably only down $500. If that, I might still be up. I don't know, but I think I may be down. I don't remember. I have to look back and see exactly how much I started this account off with. I know I tried to do a 5K challenge. That didn't work out right away. That was last year, but this year I don't know. I try to take it slow. This is the S&P. So if you look, same thing. Look at this. January 3rd, right there. 473 was what the cost was. That was the high for that day. 473. And now we're sitting at 591. We're still up above where we were. Even with that happening. Boom, boom, boom. And what do you call when you see that? They call it, like on the little sheets that I got. I ain't gonna say what it is, man. They call it 3 black crows. When it goes the other way, they call it 3 white soldiers. But I'm gonna leave that there. I'm not fooling with the system, man. The system does what the system wants to do and call things what they want to call it. What we call things around here is 3 red candles down. And look at that. That's what that was. Call it what it is. We ain't giving nothing no crazy nicknames. You understand? Look at that brain, because you can change these colors and make it what you want. What you believe is what you believe. We ain't gonna ramble about that. We got 10, what is it, 3:30, 15, 30, 30 minutes left in the power hour. And this is the last full trading week. So a lot of things are happening. Like I said, stock market people, this quadruple witching is that happens on the third Friday of every quarter. Third Friday of every quarter. At the end of every quarter. And all it is just like, contracts expire, futures contracts expire and stuff, you know what I'm saying? But it don't really hurt you like that. It's just things, hey, some stuff gets sold, more stuff gets bought. But the reason why we had this big, huge rug pull right here is because they came out and they said that they're going to do just 2 cuts, which means that they look at it, they see the same thing that we see. So once again, we all on the same page. They see that inflation is a problem. They also see that, well, we can't just continue to cut rates in the face of inflation while prices are going higher and all that stuff. Also, what that does though, is that makes businesses, it costs more to borrow money. It costs more for, especially like small businesses and stuff, large businesses, anybody that has to deal with interest rates. On the other side of that, interest rates, say not at your bank, but say you got like something like bonds or a high yield savings account, well, those rates are not going to stay higher for longer. So if you can sit over here at your SoFi, shout out SoFi, if you can sit over here at SoFi, in your SoFi checking account, and you got, I don't know, man, a couple thousand in there and they offer you 4 or 5%. Well, why would you risk this when you can get 5% on your money? Why go through all of this pain? I mean, we get it. We know that overall, because if we look here, let's see the watch list. We know that overall the S&P is up for the year. You see, 26%. Now, yeah, your little SoFi account, savings account ain't gonna it's not gonna beat that. You know what I'm saying? Because when we got in here, 466, and now we're still at 609. You understand what I'm saying? Money is money. Really, at the end of the day, you can't beat investing, I think. Maybe people say real estate, but I don't like people that much. You got to go get your rent money, man. Maybe they don't have it and you feel some kind of way. See, I'm too emotional for that. This stock market stuff, man, I like this better because just see how this is popping red or green, red or green. Every time I see that, man, it's fooling with my emotions. It's making me feel some kind of way, which is a weakness. But I acknowledge that. But I can't hurt the market, and the market can't hurt me. I can't say nothing to the market that's going to affect the market. The only thing I can do is deal with myself and how I feel about seeing this red and this green. And truthfully, it's like Christmas. Look at it. It's like watching a Christmas tree. Look at that. Red or green lights just popping up and down the tree. Jingle bells, I can sing it all. And I don't even care. What I'm saying is, invest long term. If you want to trade, fine. Have trade into an account. You can do it in your Roth. You can do it into a brokerage account like I'm doing. I'm doing it into a brokerage account because the way I'm looking at this stuff is this is like a part-time job for me. So I write this off. I write off any losses that I have, and if I'm up, I'm good. I'm with it. Some people say, well, if you start making too much money, then you got to pay taxes. Guess what? I would not have a problem with paying taxes on the money that I make. Not like unrealized capital gains. Don't get me wrong, that's great. But like your realized capital gains, why not? Why not? Shoot, this is my model. I made the money, and I don't mind paying a little tax. I know that made me stupid, but I'm working from a blue collar perspective, and I'm not an entrepreneur. So that's all I can say about that. Well, because we got this unexpected news back on this Federal Reserve stuff, this Federal Reserve Open Markets Committee. That means that, rates are going to stay higher, that's all. And being that the rates are going to stay higher, then, that things are already elevated. So people sold, those that are in power, they cashed out. And that's why the market dropped. Because why not get the cash now? Maybe they flipped, what's that word called? They're fleeing to safety. Like, let's see over here. I got a bond market. I got a one over here. I'm watching something. These are the ones that I hold. FAGX, this is a bond ETF right here, a bond fund. then you can see it's up 6% on the year. It's up 6% on the 52-week from the 52-week low. And right now it's sitting at $10. That was the previous close, 10.18. You can see here it's 10.15. So that went from $9 to 9.42, 9.52 to 54. So almost $1. And this is a bond. This is a bond fund, but it pays a 5% yield, 5%. Yeah, a dividend or whatever, a 5% yield. This right here, SPLG, this is the S&P 500 ETF, or one of. You see it's up 27%. The math is simple. I mean, then you go here to the companies, the individual companies. You want to invest in them? Look at NEO. NEO is up 26%. More than the bond. Almost, not quite as high as S&P 500. Then you go here, look at SCHD, which is the one I just put a bunch of money in, because that's also a safety play. It's only up 9%. 9%. But 9% is still more than 6%. You see what I'm saying? Amazon. So if you get into individual companies, maybe they pay a dividend, maybe they don't. A company like Amazon does not pay a dividend, but it is up 55% with all this union trouble, with all this labor troubles, with all this giving you stuff that you didn't order and it's cheap and it's not the real thing, but it's okay. It's all right, Amazon. Y'all got us on lock with this Prime, and now you got football on TV. But you see, that's up 55%. The S&P 500 is supposed to, remember, it's at 26. So just if you put your money in Amazon at the beginning of the year, if you had took your $200 or your $10,000 and put it in there, at the beginning of the year, you see you were at 144. Now you're sitting at 233. You were up 55% on the year. You're definitely not doing that at the bank. And guess what? Like here at the end of the year, you can sell that because you went from 144 to 233. So you sell back down, close out half your position because you up 55%. Now you can just stay up at 5%. You're good. You can do that. You can sell off a little bit. Take a piece. Go have fun. Go ahead, enjoy your life. It's winter's coming, you know. Tesla, oh boy. Imagine if you had purchased, put $10,000 in this back in January. And it's at 138. Now it's 488. That's the high. Sitting at 436. 211%. Bro, that's crazy. That is crazy. The ETFs, if you just wanted to put into the, you don't want to be risking it like that. I mean, just look at this. These are the sectors. The only one that's down low is the materials one, XLB. It's at 6%. That's all you got. That's still more than the bank could give you, right? Everything on here is more than the bank could give you. Everything on here is more than the bank could give you. So you gotta invest, man. You should be investing. Even the one that I like, this XLE, look at it, it's only at 6%. That's lightweight. You would think I should invest it in something else, but the other ones don't pay as high dividend. You know what I'm saying? So I like that dividend because that's long-term plays. That's not short-term stuff that I'm doing on that. That's long-term. And that's for like when I stop working, I want that to provide a little bit of income to offset some of my expenses, which those expenses may be what, I don't know, when you're old, what do old people do? I'm already halfway old like now. And all I do is sit around. I haven't figured out how to do this streaming thing, so really, I'm just sitting here talking to myself about the stock market, something I care about. And that's where I'm at on that. That's probably where I'll stay. Not really concerned. I'm gonna say, let's see this. Oh man, I'm trying to pull something up here. No. That Fidelity Capital one that I was talking about earlier. Let's look at the charts. See, check on, make sure to see what we got going on. Let's go back to Tesla. Let's see what I'm concerned about. Go to 1 day, 1 minute. Yeah, power hour looks like we have fallen back down below the start. So we're down 4%. Still not enough for that little put that I put in this morning. I'm down $90 on that. 36%, 35%. That might give it to me. If that gives it to me and I can get out of that green, which would be crazy, the next 10 minutes, 20 minutes, I'd go for it. Saying that to myself. You gotta pay attention. I think I got an order in already though. I got an order in for that on account. Select this one. I got an order in for that. Where is that live order at? Oh, I don't have an order for nothing. Oh, that didn't happen. Oh, here it is. Pending still. I got an order for $3. So I'm gonna cancel that because I really didn't accept it anyway. It should say live. So we'll see what this does. It's sitting at yeah, I canceled that order. Just put it. We'll probably cut our loss on that and get out eventually. We'll get out at like right at the end. I mean, we are up above the trend line though. If it drops down below that, man, that'd be insane. I can't see it doing that. But so we are up above where we started, but we are right where we were yesterday. You see what I'm saying? This is where we closed. We're just sitting at just below there. All right, bring this out a little bit so I can keep an eye on that. All right, so back to what I was talking about. FAGIX. I was saying that it pays a dividend, and it is what is that? It is a yield of 4.96. So that pays the FAGX from the one I was talking about. These are like long-term plays. So right here, these are things that I own, and it's up 6%, but it pays a yield of 4.96%. There you go. Make you some money. You're welcome. You're welcome. It's called Fidelity Capital Income Fund. That's what it is. The other one, XLE, the energy sector for the spider. You ready for that? The yield on that is 3.57. So in a low interest rate environment, say like in the future, when things get better and they bring rates down to 2 again, you'll make 3% over here. But right now, that doesn't look so good when you can get 4% or 5% at the bank. You would have your money over at the bank. You see what I'm saying? But I have this in a Roth. The reason is because you can't just like, well, I think it is where you can roll over a Roth, but it's an annual thing. So it's not like you can take everything out of your Roth and go, ooh, I'm going to save the money here. But if you got your money in the bank, save your money in the bank. Like right now, you can do that. But overall, this right here is why I'm building this one up. Because in the future, if nothing else, I get 3% on that, and I won't sell it, and it'll just give me a check every year or whatever, you know, whatever I choose to happen, because I won't sell it. The other one that I was talking about, matter of fact, I might do a video about this, but I don't think any of the other Tesla still is down 1% right now. Like XLB, that was the other one that didn't have much growth in it. See, it gives a 2%. Yes, the material sector. It gives a 2% yield. See, that's why I'm not fooling with that like that. XLI, which is industrials. I'm just going down the list of why we're killing time, waiting on Tesla to come down some more. Let me see, put this. See, that's my put. This is the one that I'm watching right here. ETFs to watch. We'll go down the list and talk about this. So XLC, and what we're talking about is our dividend, our yield. You see what I'm saying? So start at the top, shall we? So we'll start at the top. Starting at the top, we have XLY. XLY, that's consumer discretionary. And that gives you nothing, 0.66%. That's not 1%. Might as well keep it in the bank on that one. So XLC, let's see, XLC. XLC is communications. Communications sector, the yield on that is 0.9%. Thanks for sharing. Thank you, Google. Okay, Google's all on my stuff. XLC showed that's 1% communication sector. Yeah, no. You see XLC, that one they hold, that's where Facebook and Google, they sit in XLC. And so these are plays also you can make if you want to have exposure, because you don't own any. When you purchase the ETF, you don't own anything except the ETF fund, the part of that. You don't own the actual shares in the company. You have exposure. It's like you don't have a code. Your wife has a code, but you've been exposed. So that's what it is. XLK moving forward. XLK being exposed. The yield on that XLK is 0.67. XLK is technology select. And XLK has all the big dogs in there, Apple, Nvidia, Microsoft, we know, and hardly any of those pay anything. That's why it doesn't give out a juicy dividend on that. XLRE, this is real estate. So if you want to have some exposure like me, I don't want to be a landlord per se, but say if I was choosing to go into, want to do some real estate, you could do that. You could do that. What we're looking at here. I lost my play. What happened to my Tesla? I think it jumped. What happened to it? Oh, there it is. That clicked. I mean, it's only down at a little bit right there, but that's $100 right there. It's 442. So Tesla's probably going back up right now. That's what's happening. Just keep an eye on it. Let's see what we got while I'm doing this. Down 1%, 431. We opened at what? The previous close was 436. Down 1%. I would expect Tesla to run up, though, to be honest with you. But it might run the other way, might run down. All right, back to what we're talking about. XLRE, if you want to have some exposure to real estate, they give you a 3.45% yield. That is on par with what a high yield savings account gives you. You see, and XLRE is up 15% on the year. What's next? XLI, the industrial sector, sorry. Industrials, this is I typed in the wrong thing. Typed in Stellar Lumens. Shout out to Stellar Lumens. I think I have some of that on my Coinbase account. It's up. Good for that. Let's see, so man, XLI, they only give you a 1% yield. 1.39%. See what I'm saying? So far, real estate gives you 3. That's the highest one that we hit so far. XLP, let's see what that has. XLP is consumer staples. That's $80. Not a bad price right now. I mean, everything is up and it's higher than what it was, obviously. But it yields 2.65%. See, not quite as good as the bank, man. You can keep your money out there. You don't need to put your money in that. You do if you want to, because that gives you exposure. I don't want to say what you shouldn't do. I haven't given no investment advice at all. Costco is in that one. Procter & Gamble. I actually invest in Procter & Gamble. I want to directly into them because people buy toothpaste, man. But Procter & Gamble and all that. Procter & Gamble's a good one too, though. They got a nice dividend also. So anyway, XLP. So XLV is next. Healthcare, XLV. We're talking about the dividend, the yield. XLV, healthcare, that gives you 1.67. 1.67. Moving along, XLU. All right, that puts rising a little bit, not fast enough, so we got 10 minutes to go. XLU gives you 2.94. You see the thing? Then we're gonna skip my favorite. We're gonna go to XLF. XLF, that's the financial sector. That's all the big banks put the money at. The big banks got all the money. And they only give you 1.39% yield, just like the bank. Yeah, man. I mean, XLF, of course, it has all the banks in there. Like I said, it's got Berkshire Hathaway's in there. And you know, Warren Buffett ain't giving up no interest rate. I mean, no yield, no dividends. He reinvests in his company or whatever, and that makes up 12% of the fund. J.P. Morgan Chase makes up 9% of the fund. Visa makes up 7%. Visa has a dividend, if I'm not mistaken, but that's why you get that. So you get a little bit, as you get a little bit. That's on XLF. And that's the last one. And the next one, which is the one that I invest in for my long-term portfolio for retirement, gives me a 3.57 yield with an expense ratio 0.08. I didn't even mention out the rest of them. Most of them are cheap though with these spider sectors. Yeah, that's what it does. So I can get more than the bank. I'm getting 3 times what the bank give me, and that's where we're sitting at with that. And that gives you exposure to companies like all the big bad guys, Exxon, Chevron, and ConocoPhillips. Yeah, yay, yay. Make the world go around. You know what I'm saying? Institutional investors decreased their holdings by 3% last quarter. That's good though. That's the pullback. That's why I was able to get that at 80 versus 91. So hey, not tripping at all. But that's just them taking profits. They're just taking profits. The game is the game. I really wish I'd have been paying attention to the game and took profits when I had a chance last week. I'm gonna give you my word. I'm gonna try to be more diligent about that, and I'm gonna execute. From here on out, if something is up over 50%, I think I'll get it. I think I should take it. I think from here on out, 50%. 50% will be the new Tesla target on that. I was shooting for 100 on those things last week. I was shooting for 100 on a bunch of stuff, and I was wanting to double up. You know what I'm saying? So I got to be more conscious. 50% is super. I just got the reading off. We only get 4% for this, 3% for that, and 1% for that in the bank. If I pull up my credit union thing and look at what the bank gives me, I know what that is. That's 0.025. They give me a basis point. They're giving me a basis point, man. 0.25%. Just that. I don't think I'm lying either when I say that. So, you know, you're not making any money. Just keep holding your money. You need to invest, do something with it. And some people say invest in me, like invest in yourself. That's good for you. If you're an entrepreneur, man, get out there and get your money. Tesla's down 2% now. My little position is swinging back up. Yeah, it says 68. It's a long ways from 245, but still down 77. But that's less than 100. If I get to like 10, when I get out, I got 6 minutes to go. 6 minutes to go. Look at that, it's coming down. Nice. You know, where is it going to meet some resistance at, right? It meets the support right there. Look at that, it should bounce there. It'll bounce into the close. More than likely. What is this? That level right there that I'm speaking about? That's where it opened. You see? So it's going to go right there. What was the open? Let's go back to the watch list. Tesla's open today was, the previous close was 436. And I don't have the open on here. But we are at 426 right now, so we're down 2%. And I want to say that's where we started at. So let's go Tesla. 155, 20% down. Go ahead and get this ready to close. You might ask, why not keep it? You got it until next week, right? That's a good question. And then I can play that little theory that I was having about FMLCs. Play these strings. This is out of the money. or strangles. Out of the money put and out of the money call. See, there it is. These are the ideas that pop in my head. Dangerous, tricky. I just said I was gonna take 50% of something. If I get 50%, if I get green, I get green. Tell you what, this is what we're gonna do. If this doesn't turn green before market close, which is 5 minutes, I'll keep it. We'll see how next week goes. Maybe we have a continuation of this sell-off. Next week also, we got Christmas. Christmas is going to be on the 25th, I think. So the stock market, let's see, look at the calendar. Today is, pull up the calendar, sorry, pull up the calendar. Today is December 20th. You got the weekend, 21, 22, 23 is Monday. Market will be, you got one day that the market will be open. And then you got the 24th, 25th, market's closed. Then you got Thursday and Friday, market's open. And that's when it's the Santa Claus rally. So should I keep it till Monday with this downtrend on Tesla and close it out on Monday? I mean, because if it continues to go down, how far can it go? Well, it could go still 1 month. Look, it looks like we're finding support in the same place right here. That's where it wants to be. So it's holding with this right here, with this level here, where we were on the 18th, which is well within striking range of that 500 for the year out. You understand? Yeah, look at that. It's right there. That's 1, 2, 3 touch points, 2 touch points. So this is our support. I'm gonna bring this one up. This is on the daily. Bring that up to there. That's our support right there. That's our support. From what I can tell, you see, 1, 2 touch point. Even that, it came down and wicked off. Boom. Didn't make it to it and it wicked. It gave up there. That's that day. But this is where it held. So this is where it began. That ran up. Coming down. We touched that twice. So what could happen is we could touch it again that third time and then break below. And then I'll be sitting here feeling good about myself. And it could break down to one of these levels here. That's possible. It could break to there, or even all the way down to there. It could do whatever it wants. All right, decision made. I'm gonna stay. See how this plays out. It's calm again. This is for next. This is the 27th also. I think I rolled into that. No, I just entered and went into, that was last week's stuff when everything was up. Yeah, that play right there. That's banking on some kind of miracle Christmas miracle wish or something happening. Yeah. But truthfully, once they know about it, the cat's out the bag, man. I mean, all of the stuff that we think we know, the more we learn, the algorithm picks it up and everything. I don't want to sound like a loser and shit, and I'm not, but it's all good. Closing out, giving me some tax write-offs. Look at it, get some tax write-offs, baby. You can write off $3,000 a year on your trades. So you can lose $10,000 and then you can only write off $3,000 for the year, that tax year. And then you can carry over that remaining $7,000 for the next year. So if you lose another 3, then you still got that and you're carrying that 7. You see what I'm saying? You can do that until you exhaust the losses. So try not to lose more than 3. Or just look at it like, hey, well, I'll just write it off and that'll offset your income if you got real income or not. I don't know, but it should offset it. Make everything a little bit better. Yeah, shout out to my son, Tay-Pop. He just got his accounting degree and his business degree, not at the same time. Or maybe he did do it at the same time. I don't know. But bro is smart. He good with them numbers. All my kids smart, man, to be honest with you, man. I don't know where they must get that stuff from their mama. Pretty sure that's where it come from. But they got drive, they trying. All of them. Shout out to all of them. You know, everybody doing good. Yeah, no, everybody's doing good, man. We're all free. Boom, market's over. Market's closed. We made a decision to stay in that position. Plus, I did say if it gets down to 10%, I was going to get out, and it didn't. And look what's happening. In the close, we're still going in that same direction. All right, we wicked right there. Boom. So that proves it. If that holds as support throughout the weekend, we're going up, baby. We're going up. We're going to get that Santa Claus rally. You feel me? You heard? Yes, sir. Stocks are crazy. Now back to this interest rate thing. Over here with the credit union, this is sitting, man. It's a checking account, 0.05%. Remember what a 25 basis point was? That was a 1/4% off of one. This is 0.05. It's garbage. Garbage, I tell you. I don't know what that was. Something. Okay, that didn't happen. Took an L on Caterpillar. That was a random one that I heard. Let's see what I got here. That was me buying something. So we're sitting at 263 on that one. We are holding. Man, I already got rejected. I tried to roll, do something more. That didn't work out. I don't know why. Probably because nobody's buying anything today for like a penny. Why would you go into that? I waited too late. That's the results of that lesson that I learned. What else we got going on here? That was it. The kill. That was that one. And I don't think I have anything that's live. Cool. Good. All right, man. Stocks 5150, yo. And like I said, oh, there it is. The bounce. Holding that support. So if we hold the line right there, I'm okay with that. I'll sacrifice that too. Well, I don't know. Well, Theta's going to hit me, but whatever, however it goes, we'll see, and we'll play that as it goes. You understand? So right now, current positions that I'm sitting in, that's going to expire. Worthless, as you see. So that was 100% loss. It cost 101, so I lost $100 on that. Yep. Then this SPY, December 31st, that play's still alive. We are down $850 on that because I purchased that at, I can't remember how much it was, but it was pretty expensive too at the time. And then I went in and just like averaged down my price. But that is so far from happening. That's a loss too. Yeah, just sitting on that. Nobody's gonna purchase those. So just sitting on that. Take that and write that off with the tax man. You know what I'm saying? So that's 800, 900. I can write off to the tax man right now. We're sitting at 1,000. Not to mention the two that we had already assumed. We realized those losses. But back here we are still alive on this play. We're at 57%. That's 300. That's down from that one right there that we purchased. And this right here, we are at 62. My entries, as I look at this and talk about this, my entries are not good. I'm entering at the top. I got to do better with my entries. I got to be more patient and enter at the bottom. You know, but for what it's worth, this is a call and it didn't go up. But still, I think I remember when I looked at this, it said $2 or something. I could have waited. Let's see what this is. What is it? 462.50. 462.50. 462.50. Let's see how it moved today. I did this probably about 10. Well, I can look here and see what time I got there. 462.50 right here. I purchased that at 10:32. Okay, so I did at least follow one rule. I waited before I went in. I waited before 10 o'clock. I didn't go in right away. But look, yep. I purchased right at the top, man. 10:32. Look at that. I purchased at the top, 10:32. Go back. Be honest. So I purchased right here. Purchased a call at 10:32. See, so I didn't get in here. I got in right here. Which, I waited for the confirmation, boom, it wasn't being green. It broke above that level right there. So that's my thoughts. Right there, I entered, and then it went up. See, but that's the thing. I didn't get out. Should have took that and got out. So I purchased it for 10:32. 1032. I parked for like 6 something, 647, I believe it was. Yeah, because I got it high, 647, and it went up as high as 890. And I was asleep already, so I went to sleep right after I did that. So that's on me. That's on me. I could have grabbed 200 right there. Could have grabbed 200. And even then, like I said, I was asleep. So then it gave me a chance. Gave me another chance. Gave me another chance. Gave me another chance. I had 3 chances to be profitable there this week. I mean, today I had that was a good one. Then I had that one. But see, that's me not putting an order in before I went to sleep. Don't trade during night shift. That's the other rule. But shit, when you gonna trade, man, gotta stay. I got a job. But I had an opportunity to get a gain off of that all the way up to 1 o'clock. And I didn't. And I want to say I didn't wake up until 2. I woke up at 2. Yeah, there you go. Should have put an order in there before I went to sleep. Normally I do, but I'm pretty sure I'm putting that video. I was like, well, hey, I'm gonna keep this because this is gonna go up forward next week is what my thoughts are. Now I'm stuck with that. And that's today was all about realizing your losses, understanding, increasing that tax write-off, And you can see right now, just looking at this, 5 minutes into the close, I'm gonna work out a little bit before I go to work, and we are respecting that support level. Boom. Look at that. So we continue to do that, or it's curling, MACD's curling up, and we break up above. But if we respect that, I mean, that'll be good for the long term. Yeah. Stocks 5150, man. You got your money in the bank. I mean, suit yourself. But, what I said, savings account on the, they are giving me 0.25, 25 basis points. That's what you get on a savings account at the credit union. So you can keep your money in the bank if you want. I mean, nobody knocked you. Some people like to go count their money. I know some people that believe that the money is going to go away and you ain't going to have no money because you're going to have, I don't know what they feel like you're going to have. They think they're going to trade, be like Mad Max, where you come up to somebody and you got a calculator and they're like, ooh, I haven't seen one of these in a while, ooga, and they give you like some water for your calculator or something. I don't know. And I ain't really concerned that heavy about that. Well, I'll say this though. Right now, while we're alive, try to thrive, try to survive. And the interest rates on the SoFi account, that the checking is comparable to the savings on the credit union account. So the checking is 0.5 basis points. SoFi gives you 4% on the savings account. So you get 4% for saving your money with them. So I think it's some out there that might offer higher. But where I keep, that one gives you 4%. And that's on par with the XLE, which slightly below gives you 3. But I mean, I don't have all of them. This is in the Roth and that's supposed to grow. So the high yield is 4. And you got it over here and that's the 3. And you can get the capital gains, get the growth or whatever. XLE may be the way. Yep. All right, man. Stocks 5150. Stocks are crazy. Oh, I had another play in here. I didn't even realize I had that one. I can't believe that's still alive. That January 17th, look at that. That's my inauguration play. I'm still crazy. I really can't believe I gave up all that damn, what is that DJT election hype money. I just let that float out my hands. I was excited about watching it. That's what got me. I got excited. I got enamored by the green. I got excited about watching it. Everything was green when I logged on. It looked good. It looked good, and I like that. Tis what it is, my brother. All right, so Use is doing good too. Yeah, but I usually use this for doing a sell options on that. But right now, with everything green like it is, I ain't been messing with that. All right, so that's where we at, man. And again, stocks 5150. Stocks are crazy. We out. Peace. Hey, have a safe weekend or a dangerous weekend. Whatever route you choose, you know what I'm saying? Live your life.